Hey everybody, it's Mickie Giacomini, your host of Let's Talk Shop, and today I have back with us, due to popular demand, Steve Dicus. That's right, he was on recently sharing so much great information for our viewers on all kinds of changes and so forth with taxes and whatnot, that we just had to have him come back because he has even more to share. So Steve, we're so glad you are with us again. Thank you for rejoining us at Let's Talk Shop.
Thanks, Mickie. Good to be here.
I'm
a little bit.
I'm so glad you're here because I understand that today you're going to talk about tax filing season.
Oh boy, isn't it all of our fun time of the year? Let me start off with this first one. We all know April 15th, the famous date, and it actually will be April 15th this year. It hasn't been for off and on.
No.
The key thing people need to be aware of is it's the filing deadline. Well, it's the first one, but it's actually the payment date. A lot of people think, well, I can just do the 6-month extension to October and then pay then. But IRS will start charging, and the state of California, penalties and interest if you owe and you don't pay until after April 15th. So keep that in mind.
Okay, so what you're sharing, I just want to make sure I'm picking up what you're throwing down. So just because you ask for an extension does not mean that you can extend when you pay. You still have to pay on April 15th. Is that right?
That is correct, unfortunately. So yes. Plan ahead.
Right.
Something else, if you're doing your own return this year, so for years we were used to having a 1040 and it was 2 pages.
Yeah.
Last year with tax simplification, the 1040 was 1 page and everything was stuffed onto 1 page. It was kind of exciting, especially for me. They've gone back to 2 pages this year. So it's a moving target with the forms and stuff from IRS. Also, they've introduced some new forms. And for those of you business owners, beware of the QBI, qualified business income, the 20% deduction. It was a big topic last year, and I know people missed it, especially if you own rental property. A lot of people, and that can be considered business income, and you can qualify for the 20% deduction, which is a bonus. A lot of people missed that last year. And if you're involved in a partnership or an S corporation and you get a K1 from somebody, many of those K1s, if it's business related, have that QBI information on it. And if you're doing your own return, it's easy to miss. And you're leaving a write-off on the table.
Wow.
So beware of that. 20% of this qualified business income. It could be thousands of dollars of deduction that you might miss. So beware of that.
Oh my gosh. So that's very good news for people like myself. Is that right? So one of my businesses.
Yes, it can be. If it was missed last year and or this year, it was so new and so convoluted.
Okay, so let's play pretend here. Okay, one of my businesses, I own a couple of small businesses, and one of my small businesses is we own vacation rentals, okay? So it sounds like this is something that's going to impact me perhaps, and I'm wondering if for some reason somebody out there similar to me missed it last year, can they do something about that so that?
Yes, you can actually amend your tax return because now there's actually been some IRS clarification on this whole QBI thing for just like yourself.
Okay.
Up last year in the tax season, everybody was going, maybe we should just step back and not take it. But as the year went on, the IRS has now clarified. And so, yes, there is going to be opportunity to do some amended returns for certain people if you meet the criteria.
Oh, that's fantastic. I mean, I know that as a consultant, oftentimes when I am working with people, I encourage them, and I encourage especially our youth to be mindful of that when they're buying properties and so forth, to think about ways where they can bring in a passive income. So it's like, oh, it's nice to have some kind of bonus,
And that's all part of that tax act in 2018 was to benefit business owners. And wouldn't you say people that have property and they're managing it and people paying, isn't that really kind of a business if it's run that way?
Okay.
So that's kind of the essence of it.
Well, good.
Share something else with you that's going to be a big thing, at least for a lot of my clients, and maybe some of you out there that are watching this. If you're a California resident, you probably, and you had reasonable income in 2018 and or 19, there's this thing called SALT, which stands for the state and local tax reduction, $10,000. So if you're working someplace, your property tax, everything exceeds that $10,000. In the past, we used to be able to write it off. We in California were able to last year. We were cut off at $10,000. And so where I'm going with this is, in California though, if I got a refund in 2018, you get a form 1099-G, and I got mine in the mail last week. However, my personal return was limited at $10,000, even though I had more in state and local taxes than $10,000. So I didn't get any tax benefit from this refund that I'm getting, the amount I paid in. And so you have to address that on your tax return. And so I'm showing it as non-taxable.
Now, wait a minute. I don't get that. That doesn't make sense. That doesn't make sense. It seems like a double whammy.
Well, no, it's a positive. It's a positive for us. So in the past,
it is.
2018, because we take these state taxes paid in, estimated taxes like I make, or somebody's working for somebody, they have money taken out of their paychecks, paid into California, we get that as a write-off on federal.
Oh, okay.
If we get a refund from the state, they say, no, now you've got to pay tax on that benefits you got the next year. That's what this is. But because of this limitation, many of us might get refunds, but we got from the state, but we got no federal tax benefit for the amounts over $10,000.
Oh my gosh.
So
much to know.
Well, but yeah, you're right. And here's the other thing, is that 1099 goes into the IRS computer. The IRS computer is going to be looking for that on your tax return. And so there's a way to address it. If you don't get it, you're going to get a notice from IRS and say, hey, you didn't report this. We're going to charge a tax on it. And maybe they'll penalty and interest too. So beware of this one. This is coming, and it's not going to be a lot of fun.
Okay, and just remind the viewers again, one more time, what is that called?
Well, it's the form 1099-G. It comes from the state of California, and it shows your state tax refund for 2018. And if you were limited and you itemized by the SALT, the state and local tax, that the $10,000, there's a strong chance you shouldn't have to pay any tax on that on the federal return.
Let's hope not.
It can save you some, it won't be significant, but it'll save you some money. And that's what I'm about, saving you some money. The next
That's what we like about you. That's why we have you back.
So some of your viewers might be involved in cryptocurrency, basically Bitcoins and things like that, or the gig economy. These are two big things that the IRS is now focusing on, because if you're doing ride sharing, or if you're doing VRBO, or if you're doing things like this, short gigs, short types of gigs, and you get paid cash, most of that's not being reported. There's now actually a box you're supposed to check on your tax return for 2019 saying, I did not participate in that.
Interesting.
Because again, if they figure this out that you did participate in it, you're basically saying, oh my, I participated. What I mean?
Right.
So they're trying to kind of put you in a corner.
Right.
We're supposed to get all of our income.
Yeah. Well, and we do, right? I think we all do. We try to, right? I can speak to that a little bit as a business owner for vacation property rentals. Be very knowledgeable, viewers, about what your state and local laws are, like your county laws. For example, I live in Placer County in California, and we do pay a quarterly tax. I have to report that through my business, how much came in, how many days the rentals in California were rented out, and all that. I mean, there's a few hoops that you jump through, and you pay those taxes quarterly, and they will hound you. And they will find you, by the way, because I will admit, I didn't know about it at first, and they let me know about it. So if they've been letting you know, you need to pay that. They know you're there. So
Right, and that's their focus. So just to be aware of it, because a lot of people are starting to participate in these types of gig activities.
exactly.
So,
Which, you know, people are doing this because they're looking for additional income revenues so that they can make ends meet, right? So we're
right.
all like just working so hard to make those ends meet. So it's always like, oh man, every time you just about get ahead, now some new tax thing comes in. But you do need to be legit. I'm always going to promote to everybody that whatever you do for a side hustle or your full-on business, always err on the side of being legit.
And you'll sleep well at night,
Right.
not worrying about it. Hey, something else. This just happened recently as well. In the past, if you were divorced and you had to pay alimony, it was a write-off. If you received the alimony, you had to report it as income. That went away with the 2018 return with the Tax Act, but they brought it back again. So starting with 19, if you had to pay alimony, then you get to write that off. But they're now asking on the return the date of the separation or the divorce decree.
Oh, interesting.
The same thing's true if you're receiving it. There's actually a line now that says you say when the divorce happened. I don't know. It was years ago. I don't want to think about it. Okay, fine.
One of the benefits to staying married, people, you don't have to worry about that one.
It's been 40 years for me, but that's a good thing. Hey, something else. Wait, we talked about that. California, you may be aware, did not conform to the tax law changes that happened year before last. And so people come to me and they say, well, Dicus, I can't write this off anymore. On federal, that's true, but California did not conform to the federal tax changes. And so I tell my clients, bring me everything you used to bring me, like reimbursements as employee, union dues, things like this. They are still write-offs in California. Again, it may not help you federal, but it can help you on California.
Oh, right on.
Beware of that.
I'm going to bring a wheelbarrow full of tons of stuff for you, Steve.
And then lastly, can I share this with you? Because I get these phone calls at home, on my personal cell phone, and on my business line on a regular basis. It's dealing with the IRS is calling or Medicare.
Oh my gosh, Steve, I'm so glad you're bringing that up. They call me all the time. What is up with that? I don't understand.
This is actually off the IRS website. Mickie, I'd like to just read these 4 bullet points real fast for you.
Okay.
It says, the IRS never calls to demand immediate payment using specific payment methods because they're looking to get your credit card information or your information. And of course, they ask for your social security number too, because that way they know who they're talking to. So that's first. The IRS never threatens to immediately bring local police over or law enforcement because that's here on. They're going to be coming in 5 minutes. Get ready.
Yeah.
Also, the IRS never demands that you pay taxes without giving you an opportunity to appeal or to respond back. And then the same thing is the IRS, they never ask for credit or debit card numbers over the phone. There are times the IRS will call you, but typically you've already been in dialogue with them before, or you receive notices about things and there's things going on. And the same thing true with Social Security, state of California. And I have clients call me years ago when this started, 3 or 4 years ago, it became a big deal. I think people are more aware of it now. They used to call me, Dicus, I just got this call. Do I call them back? And they're freaked out because that's what they're expecting you to do. They're expecting you to be emotional and respond back.
Right.
So that.
And doing anything and providing any information so that they're not in trouble, right?
That's
I think it's so sad that there's scams out there. And I encourage viewers not only to listen, heed Steve's advice, but please share this with your loved ones, especially, I'm not trying to target anybody, but I want you to please encourage any of your elderly loved ones not to take those calls. It's really important not to call them back, and to, if they get those calls, to call you so that you can talk it out with them, because it's just so sad that they prey upon people and their good hearts. So
Yes, because they've gotten so sophisticated. So my business prefix is 786. I get 786. I just think they're around the corner, but they're not. They're probably in another country. And also websites. When you get an email, they've actually got it down now where they can actually make websites look like the one, like your bank, like where you normally do the banking online, but it ain't your bank. So beware. They're very, very sophisticated and sneaky.
Very
and don't
sneaky.
fall.
I'm so glad you brought that up. Thank you, Steve, because we don't want our viewers scammed. We don't want anyone scammed, whether they watch Let's Talk Shop or not, right?
I agree. And one last thing to share with the group, and I've watched this for several years now, one of the best ways to get your tax refund is do a direct deposit into your savings account or your checking account. It's coming really fast. I have clients tell me it comes in days, a couple days, 2, 3, 4, 5 days. If you want your money and it's secure versus wondering whether it's coming in the mail, consider direct deposit. Just make sure you get the right routing number and account number, and don't change your number before you get the refund. I've had clients do that.
That's a good point. That's a good tip. You know, we've been doing that for years, but we rarely ever get a refund. So, you know, I feel like it's the other way.
If you're getting a refund, take advantage of it.
That's a great tip. Thank you so much, Steve. These tips for tax season are going to help so many people. I know our viewers are going to love learning more. And hey, viewers, if you've got questions, drop them in the comments. Steve will be perusing them. He'll also drop his information in there. So if you have questions for him, you can get your questions answered, all right? So thank you again, Steve, for joining us.
You're welcome. Have a good season, everyone.
Yes, and happy tax season to you too. We hope you're going on a vacation right afterward. All right, well, thanks so much, everybody, for joining us this week, and we will see you soon here on Let's Talk Shop. Bye, everybody.